Let us see the next question. Door Limited is considering an investment of rupees 4 lakhs. This investment is expected to generate substantial cash inflow over the next 5 years. So life of the project 5 years. Unfortunately, annual cash flows from this investment is uncertain. But the following probability distribution has been established. There are 30% chances cash inflow will be 50,000. Another 30% chances it will be 1 lakh. 40% chances 1 lakh 50,000. At the end of the 5th year of the life, investment is expected to have a residual value of 40,000. And of course, it is going to be generated in each of the case. Discounting rate is 5%. The first question is calculate NPV under 3 different scenarios. So the question says that you are required to make the computation of the NPV if annual cash flow is 50,000, if annual cash flow is 1 lakh, and if annual cash flow is 1 lakh 50,000. So once again we can understand it like this. We don't have to mention it. This is most likely, this is pessimistic, and this is optimistic. So in this 3 different scenario, we are required to make NPV calculation. Please write down heading calculation of NPV in each scenario. Column number 1 is year. In that set is year 1 to year 4 and 5th year. Discounting factors have been provided to us. First year factor is 0.952 plus second year factor is 0.907, third year factor is 864, fourth year factor is 823, that is 3.546. Last year factor is 0.784. This is what we have as year 1 to year 5 factors. The recurring cash flow is 50,000. So it is 50,000 rupees year 1 to year 4, and last year apart from this 50,000 we will have the residual value of 40,000. So the total will be 90,000. 50 plus 40. So what will happen, friends? 3.546 into 50,000. 1,77,300. 0.784 into last year cash inflow is 90,000. 70560 plus 177,300. So 2,47,860. This is the present value of the cash inflow, and against that the investment is required to be made of 4 lakhs. So we get NPV which is negative 150 to 140. This is the way NPV in the first situation will be calculated. Next is cash flow is 1 lakh. And the last is cash flow is 1,50,000. So again the cash flow and present value. Cash flow and present value for NPV calculation. Next, cash flow is 1 lakh. Last year is 1 lakh plus 40,000, 1,40,000. So present value 3,54,600. Next, 0.784 into 1,40,000. 109760 plus 354,600. So 464,360. Amount of investment is 4 lakhs. So NPV is 64360. That is the NPV in the second situation. Next, cash flow is 1,50,000. So recurring cash flow 1,50,000. Last year it will be 1,90,000. That is 150 recurring plus 40,000. 3.546 into 1,50,000. 5,31,900. 1,90,000 into 0.784. 148,960. It is the present value of the cash inflow. 680,860. Amount of investment is 4 lakhs. So NPV is difference of both of them, 280,860. This is the way NPV is required to be calculated. So this is the answer of the first question, wherein the question says that you're required to compute the NPV under each of the 3 different scenario. So if at all it is the most likely outcome, then what is the NPV? If it is best outcome 1,50,000, what is NPV? If it is the worst outcome 50,000, what is NPV? The second part of the question says that what is the expected NPV? I want you to tell me answer of the second part of the question, and then I will do answer. Please put your answer in the chat box. Dear students, second part of the question can be done by more than one method. Let us understand how we can do the second part of the question. Let us answer expected NPV. In that method number 1, it is expected cash flow method. So in that what you will do, friends, working note number 1, calculation of expected cash flows. It is probability cash flow. We'll assign x variable to it, probability into x. So we understand 3, 3 and 4. 3, 3 and 4. So there are 30% chances that the cash flow will be 50,000. Another 30% chances it will be 1 lakh. And 40% chances it will be 1,50,000. So what will happen? 30% it will be 50,000. So it comes to 15,000. Then it is 30,000. And then it will be 60,000. 30 plus 60 is 90. 90 plus 15, that comes to 1,05,000. So this is the expected cash flow from end of year 1 to end of year 5. Next, calculation of NPV. In that year 1 to year 4, recurring cash flow is 1,05,000. In the 5th year, you will receive, apart from 1,05,000, You will receive 40,000. So it is 1,45,000. These cash flows will be discounted at the rate of 5%. Year 1 to year 4 factor summation is 3.546 and last year factor is 0.784. So based on this we'll compute the present value. It will be 1,05,000 into 3.546, that comes to 3,72,330. 1,45,000 into last year it is 0.784, 1,13,680. So the total of both of them is present value of the cash inflow, and the total of that comes to 4,86,010. From that investment will be deducted. What is the investment? 4 lakhs. This is the way you can compute the NPV using the expected cash flow method. This is the first method, or otherwise a smart student like you can also do working like this. Method number 2, in that expected NPV method. Dear student, we already have calculated NPV in the different scenario. So what you can do, probability NPV, I assign x variable to it, probability into x. So there are 30% chances, another 30% chances, and 40% chances. NPV in the first scenario is 150 to 140 negative, 64360 positive, 280860 positive, 280860 positive, 64360 negative, and negative 150 to 140. So what you can do, friends, 0.3 into 150 to 140, that comes to 45642 negative. We can compute directly the mean value for this. There are 30% chances NPV will be 64,360. So it is 19,308. Another 40% chances it is 280,860. 1,12,344. And based on that, expected NPV can be calculated. So 112,344 plus 19,308 minus 45642. It comes to exactly once again 86010. That is the way we can compute the NPV, say using the second method. Dear students, we understand. Suppose directly this question would have been asked. Then in that case, going with the first method is less time consuming, wherein we make the computation of the expected cash flow and NPV. Since the second part of the question is asked after the first part of the question, wherein we have to find NPV in each of the scenario, so in this question going with the second method will be less time consuming. Otherwise, usually the first method is going to be less time consuming. Yes, I want somebody of you to tell me what would be the answer for the third question. Advise Door Limited whether investment to be undertaken or not. Answer of the third question is very simple. As expected NPV is positive, so you should accept the project. That is the way we are required to give answer. Right on answer? The company should accept the project, comma, because NPV of the project is positive. This is the way we are required to give answer.